Good evening, all of you. A warm welcome to Great Eagle. Many followers, many traders, when I met several times, they asked one question to me. That is, most of the traders asked the same question, but the question they asked in a different format. But they asked in a one question only. How the order flow help us to take trades, and what is the difference with other candlestick pattern and the order flow and the market profile. So here I am going to give you a glimpse within a 5 minutes of today's order flow with respect to the market profile chart of both indices, which is Nifty and Bank Nifty. The question asked by many traders for me, when I checked with the order flow in late 2017, I asked the same question to the guy who introduced the order flow to me. I asked him what is the difference in when we are seeing the order flow? How we can understand the market is yet to give a move, or market is poised to give a range bound or a move. How to identify the trade scenario with respect to the order flow? So the Great Eagle, we are having knowledge in the market profile, having knowledge in order flow analysis, having knowledge in point and figure in the equity side. So we, Great Eagle Capital, we using order flow and the market profile charts for trading indices, both Nifty and Bank Nifty. So I'm going to share you this is the Bank Nifty. This is the Bank Nifty. Right side you can able to identify the Bank Nifty market profile chart, and the left side the Bank Nifty order flow chart. Order flow is just a simple thing. It's an X-ray of a candle. If you are seeing a green candle or a red candle, you cannot identify whether it is a buying or a selling is happening inside, and which player is more dominant than other player, so which is neutral. So these kind of things get clarified in order flow. That is the edge we Great Eagle have, and our followers, our paid members, they are having the same scenario with that. So this look at the market profile Bank Nifty chart. So the Bank Nifty yesterday, the Bank Nifty closed around 42,800 level yesterday. And today what happened? The Bank Nifty opened near 42,720 that level, and it came down. And look at the volume. There is 15,702 net players, net lot is traded, and inside that 4,556 net sellers are there. And what happened the next play? This is a half an hour candle, so it's a 30 minutes candle you are seeing. That is extra. That is the order flow which I am giving in front of you. So where is next candle also there is selling happen, and 7,114 30 minutes volume total, and 1736 is selling. So when you identify that on Monday and Tuesday 42,500 to 42,550 level, there is a good buying is happened. Due to that, the market is gone and touched 43,000 level, and it is reversed and that level. So whenever the 42,500 level comes, the market is getting support over there and it's reversing from that level. Look at the scenario of the Bank Nifty. This 42,500 level, the Bank Nifty came down and 42,500 came. the next candle it came below 42,486. And what happened? Whenever the market came down to 42,500, 550 level, the POC, the point of control of the particular 30 minutes candle came down to 500. And very next candle, it also, look at it, the POC again came down to 42,536. And after the another 30 minutes candle, which is around 11:55 to 11:45, that candle has also the volume, largest volume concentrated at 42,550. And whatever, look at the 11:45 to 12:15 candles, half an hour candle. Again, what happened? The volume concentrated at 11, 12, 42,553. So if you see when a bigger player comes to the market at the first half an hour, within 12 to 12:15 time, that player will give you an extension. If the player came down to the selling side, they will extend more towards lower side. If that seller is failing here, think that that is a retailer player and there is no bigger player. If a seller is failing sometime, or if a buyer is failing, which means that other party will taking charge. That party will come to take place and which one? Front end move. Look at what happened. Very next candle, 12:15, 12:25, again the POC again came down to 645. So every candle goes, the POC is going up, which means that, and look at the volume. When the breakout come, the buying 2683, buyer came again for 1064, again buyer came 1465. But what happened in the last candle? Again 1363. So whenever the POC is agreed, and look at the last 245 to 315 candle, again POC came down below 42,988. And what happened? That option sellers, many people, those who write at option at 30 rupees, 20 rupees, 10 rupees, they forced to cover 43,000. And 43,000 call when if it's from 6.2 it went to 263 level. This is how a order flow help us to avoid selling, or for example, if you take a PE here, your stop loss must be the first half an hour high, max to max. You won't lose. If you lose the money, you can lose the money, but you won't wait for the full time to erode the premium. And when the order flow shows that the POC is migrating towards downside, the POC means largest volume concentrated area, and which means that the seller is no longer existed there. And look at the third half an hour candle, buying figure emerging, which means that small buys emerge. The small buys, passive buying is coming into the market in order to kill the selling volume, and seller will take care of the charge. So this is how a order flow help us to avoid unnecessary trades or to take a trades. And I suggest for the Great Eagle, we suggested our followers that above 42, 580, 540 level, the 580 level, if market sustained, the Banknifty poisoned to move 42, 940 level, which is a seller of POC yesterday. And max to max we expected near 43,000, but due to the option seller mathematics works, they ran to cover the position, that given more momentum to the end of the day. So this is how an order flow happening. This is how a order flow help us to understand how the market is helping it. I'm just giving in the glimpse of Bank Nifty. Why? Because I'm doing Bank Nifty more, and my 99% of trades are, and our groups are majorly posted in Bank Nifty. So this is how an order flow help us to understand it. Look at the Bank Nifty order flow. It came down, the POC migrated to here, and PGROS is migrating to the lower side, means the buyer is coming or seller is not interested. And look at the end of the day, large volume candle came down and the Bank Nifty came down on to 43,255 level. This is how an order flow works and help you to understand the position. So if you are interested to study order flow with the Great Eagle, you can Telegram us or you can WhatsApp us our number So once again, thanks for watching our video regarding order flow. So tomorrow when we are looking for the Bank Nifty, the Bank Nifty player has to do, tomorrow we are having a good selling 43,300 and 43,360, and these are the selling level. Above 43,350 level, the Bank Nifty again moved to 43,700 level. So that is a level you have to be very clear. Sorry, 43, there is a seller, which is a profile of which one? 21st of December. It has a very large selling. That Wednesday we had Wednesday very good selling. So the Bank Nifty has to go through many selling a level 43,355, 43,430, 43,528, 43,618 and 43,700. These are the sellers level we need to worry. So that tomorrow we'll get to know by in the Bank Nifty whether the players are coming or seller again emerging. So this is how an order flow help you to understand position sizing and taking position with respect to the market conditions. Thank you once again, and subscribe and please do support us.